You need anything else? Hey traders, today we're going to be talking about the Alligator Indicator. The Alligator was an indicator developed by Bill Williams that consists of 3 moving averages. Traditionally, these moving averages are smooth, simple moving averages, or SSMAs. Occasionally, however, you'll see them as weighted moving averages, exponential moving averages, or just plain simple moving averages. The point of these 3 moving averages is supposed to be showing you when the market is trending. Bill Williams said that the market only really trends 15 to 30% of the time. The remaining 70 to 85% of the market is just sort of sitting there in limbo, you could say. The first of these 3 moving averages is called the ellipse of the alligator. The ellipse is the shortest term moving averages, and it's also shifted the least. It's typically a 5-period moving average that's shifted 3 to the right. And the point of the ellipse is to show you if the market is going to be trending in a more bullish or bearish position relative to the position of the other 2 moving averages. The second of these moving averages is called the teeth of the alligator. And the teeth of the alligator is a little bit larger period, and it's also shifted a little bit more. It's an 8-period moving average, shifted 5 periods over to the right. The point of the teeth is really to show you when transitions start to occur, when the teeth start to cross over the ellipse, or when the teeth start to cross over the jaw, is where we start to get those changes in the market's direction. The third of these moving averages is called the jaws of the alligator. The jaws is the largest period moving average and also the farthest shifted moving average. It's set up to be a 13-period moving average, shifted 8 periods over. The point of the jaw is just like the ellipse to show you which direction the market is really going in its trend. Now that we know what the 3 moving averages are that compose the alligator indicator, we'll look a little bit more at the entries for the buy and entries for the sell. The thing with the alligator is since all those moving averages are shifted to the right, we have that movement on the chart and we have the pattern presenting itself on the chart before the alligator even really lets us know that that pattern is there. The reason for this is that pattern is only showing itself once the market is in an established trend. So our buy entry will be when we have our ellipse on top of our teeth, on top of our jaws, going in that bullish direction. Since it's shifted, the market has already started its bullish trend, and now the teeth, lips, and jaws are making up for that lost time, and they're starting to go bullish as well. So we're in that trend already. So we know that the market's going up, and we know we're on a good side for the buy. So that's our buy entry, lips, teeth, jaws. And as the market is continuing in that direction, hopefully with these parallel lines for the lips, teeth, and jaws, we'll remain in that buy. The exit will really be once we start to see some of those lines become not so parallel. As they start to shift and look like they're going to cross over is where we really start to get that mouth of the alligator closing down. And so what we can look at this as is the alligator is eating the market. It's eating the trend. And so as that trend is finishing, it starts to close its mouth and chew on the trend. So we're chewing, and that's when our lips, teeth, and jaws all start going on top of each other, and we see a bunch of crossovers. This chewing and digestion is that 70 to 85% of the market that Bill Williams said wasn't trending. And so as we're digesting that, we're just waiting for a new trend to start, which will take us into our sell entry, which is when we have our jaws on top of our teeth, on top of our lips, all going in the bearish direction on the chart. Once again, since it is shifted, we do have the market already going bearish, and this is just a confirmation that the trend is now developing and we're in that 15 to 30% of trending markets. Same thing for the exits. Once we're going in that bearish direction and we start to see those lips overlap the teeth or the teeth overlap the jaws, is when we really start to look at the market and get ready to exit for those trades, because that's when we're going to be entering that 70 to 85% of the market where the alligator is really just sort of chewing, digesting on that food and sleeping while we're waiting for another trend to develop. Hopefully this short video has given you a little bit of insight into what Bill Williams was thinking when he developed the Alligator Indicator, and hopefully it proves to be a useful tool in your trading when you're trying to find market trends. If you like this video and want to see other ones that we produce that talk about similar indicators or strategies, feel free to click that subscribe button below along with the bell icon, so that way you can get a notification anytime we publish one of these videos. And feel free to comment in the comment section as well what different indicators or strategies you'd like to see us discuss to further help you along in your trading. Thank you guys for watching, and happy trading.